And good afternoon.
If we can begin by looking at Kenyan Tourism Board, which released results just this afternoon. Growth of international tourists rose by 30% in 2009. Now, 2008 was a difficult year for the tourism industry. So how did this growth impact on the economy and specific sectors, specific counters such as TPS Serena?
Well, I'd have to say, first and foremost, you have to give credit to the Kenya Tourism Board for their aggressive marketing campaign, which is paying dividends right now and is actually showing that with the volume of tourists coming on board. Then when you look at the tourism sector, it's actually a very wide sector. Not just the TPS Serena, you also look at the transport industry, the Kenya Airways for that matter, hospitality. Now the hospitality industry, you look at also in terms of produce, you look at the employees who are employed by some of these restaurants and that for the matter. But key amongst it is that tourism is a chief revenue earner in terms of foreign exchange. It's actually way at the top next to flowers as well as foreign exchange remittances. I would say medium to long term, you not look at any major improvement to TPS Serena as a stock, because you look at it, it's just but one of the key stocks we have in the market. Actually the only one where as far as tourism is concerned.
Other results in today as well as from Kenya Power and Lighting seems the demand for energy as well as their penetration into the rural areas are finally paying off. How's that stock performing and how are investors looking at it?
Well, if you look at Kenya Power and Lighting stock for a couple of years, it's a very conservative stock. It doesn't really move aggressively as far as market results are concerned. But when you look at also something on the ground in terms of their plans going forward, the rural electrification program is one of the things that they set up and is paying dividends. Then two, you notice they've started introducing what they call pay-as-you-use meters, removing the traditional meters, so whereby now power will be, you pay as per your consumption, and what you call the prepaid meters. Then going forward, the demand is still increasing because you look at key industries are actually expanding. There's more demand, especially in the cement industry, and you look at also additional power that is being generated by the likes of Momias. So you find that as far as their expansion is concerned, there are key projects that are coming underway. There's a power generation project that is coming up in Turkana for windmills. There's one, they're expanding the geothermal under Kenyan, which will now meet the demand that KPLC is creating. Okay,
let's briefly look at the banking sector. It's been a week that did reflect the performance of the banking sector in 2009, but just recently the CBK said average performance of the banking sector in 2009 would be at about 15%. Some of the banks that have released already stand below, almost single digit for most of them. But there's some that are yet to release, say next week, Standard Chartered Bank, Diamond Trust Bank. Who do you expect to be the outlier, who might bring that level up to 15%?
Well, I'd have to look at the banks. If you look at the traditional banks and also the banking industry as a whole, there have been a lot of challenges from a regulation point of view, from an expansion point of view, and then mostly in terms of the economy was not performing as per the norm. But when you look at the way they have actually turned around from Barclays Bank, the profits that it's posted, you've seen KCB is actually the second most profitable bank. You find the likes of Equity. But when you look back on their board, you find that their strategy is what will pay dividends. Once the return on investment now is they're able to operate properly. Because if you look at these key banks like Barclays, KCB, Equity, there's been a lot of expansion. Within Kenya and also without, as in outside Kenya, you look at the East African community. So I would say it's not going to be immediate, that 15%, but on a combined whole, if you look at another 1 year or two, they might be able to meet that threshold. And then with at least, with little bit, the regulation is actually helping because now banks are being streamlined. You don't have, gone are the days where banks are collapsing left, right, and center, because now there's a fiscal discipline, and then also they've ended up now becoming more creative in terms of the products that they're releasing into the market.